I'm speaking with Dr. Christian Baylis, Chief Investment Officer at Fortlake Asset Management. First off, Christian, thank you very much for participating in the Inside Network's Investment Leaders Forum, Byron Bay.
Appreciate it. Thanks so much for having me.
Great pleasure having you. Christian, for advisors who are new to you and your team and your fund, how would you summarise the Fortlake investment approach?
We're using a standard, boring, mundane asset class and trying to use it in an alternative way to deliver low correlations to the asset class and ultimately other asset classes. That's really what the objective is.
You've delivered pretty strong returns amid inflationary pressures. What are the really key strategies that have helped navigate this volatility?
Yeah, the way we like to talk about it is we break up the portfolio into two separate categories. We've got the long side of the portfolio and the short side of the portfolio. The long side of the portfolio is really there to mitigate trouble, to augment the process for us to make sure that we're cross-subsidising some of our more defensive insurance-based strategies. So we use duration, curvature, inflation hedges, and a wide variety of corporate bonds and government bonds. That part of the portfolio is there to basically provide a bedrock in terms of solid return, low volatility. And with the income that comes off that portfolio, we then go and purchase default protection across a variety of bad quality, low quality issuers in the US and also in Europe. And we seek to get these pops of capital when defaults ultimately come through on that short side of the portfolio. So a little bit like a long short equity fund, just the way in which we do it is a little bit different.
Explain curvature for us, and is that something you use all the time or only sporadically when it comes into usability?
Yeah, so we're a Puritan absolute return fund, meaning that we don't have to be doing anything. We're not structurally wedded to any particular part of the market. We only do things when we think that there's a high ex-ante opportunity in the market. So we basically are seeking to filter the best risk-adjusted prospects from any given market. Curvature is obviously one of those, but curvature is an area that has been very fruitful of late because we've had a lot of volatility due to Mr. Trump. We've had a lot of geographical disparity because of Mr. Trump, and curvature has become a very active alpha generator for the portfolios, i.e. seeking to benefit from one region versus another.
How does Fortlake integrate ESG factors into its fixed income strategy playbook without compromising performance?
Yeah, so we've always believed ESG should have always been part of the standard credit framework. We shouldn't be carving that out as a separate type of process. ESG investing is good investing, and it should be done through any type of typical credit analytical framework. So what that means is you always want to be looking at governance. Governance has been looked at from the dark ages of the credit markets as one of the most important things. Think about Enron. Think about these sorts of places where you've had governance failures. The S side is very unequivocal. We don't really understand exactly what that means in the world of the corporate bond market. Everyone has a very different definition. For us, we try to focus on specific things in that area to make sure that we've got a tangible foothold into whatever analytical point that is. And really what we're seeking to do is take advantage of ESG opportunities. A great example of that would be AMP. When it had no pricing for ESG risk at one point, it now has a lot of pricing into its corporate spreads. That presented an ESG opportunity, and we're looking to take advantage of those opportunities when it makes sense.
With really distinct fund objectives, how do you tailor risk management to ensure stability across market cycles?
Yeah, so we've got an explicit downside volatility target in our funds, meaning we focus on what investors can lose and what they're seeking, what we believe that they should be focused on in terms of how much risk can they tolerate. So across our funds, we have very clear, definitive targets of what we want to stay within, and we really hold our feet to the flame on that, making sure that we do not breach that. And that is how we basically determine our success. The returns from our perspective are objectives, and we seek to do as well as we can in the context of making sure we stay within that risk, that downside risk framework. So we have a range of strategies and a range of trading techniques that we introduce into the portfolios to make sure that we never breach those downside vol targets.
Given recent bond market volatility, how have you adjusted your positioning to protect investor capital?
Certainly in Europe. So a great example, when we had the worst day or two on record in German bonds, we reduced our interest rate exposure to Europe in terms of we were short that market. That was a very profitable position for the funds. We've been long US, and we continue to like being long US. And so we're running an outright duration position now in the portfolios, meaning we like being long bonds here, protecting the purchasing power of the portfolios by locking up those higher rates. That's certainly been a very good position for us to take. We're starting to wind that back a little bit with the most recent rally. We're introducing things like buy-ride strategies because of the huge disconnect between implied volatility and realised volatility because of the fear of the tariff war and these sorts of things. Those sorts of things are just low risk-adjusted ways of eking out a pretty good return and introducing a good chunky sort of yield into the portfolios.
Christian Baylis from Fortlake Asset Management, once again, thanks for being a part of this event and your time today.
Thanks again for having me. Thank you.